This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello everyone, welcome back to a brand new episode of the Smart Property Investment Show. I am Grace Ormsby and it is a pretty big week for the Australian economy. The federal budget does get handed down tomorrow evening if you are listening to this on the day of the release. Otherwise, for everyone else, the 14th of May 2024. So whether you are listening pre-budget or post-budget, this is going to be a pretty interesting conversation for you to be listening to. It's an absolute pleasure to be chatting today to the head of research at LJ Hooker Group, Matthew Tiller. Welcome to the show, Matt.
Hi, Grace. Thanks for having me.
It was pretty uncanny that last week, Matt, I got this release from you guys at LJ Hooker Group about your list of wants from the coming budget, a big federal budget wish list. And over the weekend, I feel like some of this has already come to fruition. This is a pretty as it comes podcast. We do react to the latest news and announcements, and this episode is going to be no different because we did have a whopping big release from the federal government ahead of the budget to sort of sneak some stuff out there before the rest of the budget's announcement on the 14th of May. Matt, talk us through what the release was actually like, because it has been a pretty big one to announce pre-budget, to not just leave to the night of.
Yeah, that's right, Grace. Every year, the federal budget loves to get out the good news stories prior to the budget release to ensure that they get the airplay and the coverage that they want. And, you know, they always love to bury the not so good news in the detail of the budget. So on Friday, the Prime Minister convened a national cabinet, which in turn signed off on these new housing measures, which the detail of which really will be contained within the budget. But the high level kind of detail was that it's a $11.3 billion package, and mostly centered around the provision of new supply, particularly of, housing, affordable and that kind of crisis type housing as well, which is, where everyone's sort of in agreement is where the money sort of needs to be focused is around supply. So there was a $9.3 billion 5-year national agreement with the states on social housing and homelessness. And this was for the states and territories to combat homelessness and provide crisis support and build and repair, social housing within the states' portfolios. There was also a $1 billion policy there, which is directed towards crisis and transitional accommodation. So that's in line with the recent conversations we've been having around, domestic violence and the like. So that's a welcome package there. And that policy falls under the National Housing Infrastructure Facility. So it's not new money. It's been reallocated from another housing infrastructure facility, but it's a welcome announcement that money will get directed towards women, children fleeing domestic violence and youth as well. The final piece there was another $1 billion to get homes built sooner. And this is sort of a bit of an infrastructure package. So funding for states and territories to build roads, sewers, energy, water and community infrastructure, particularly around those areas, the greenfield areas where new homes are needed and are planned for into the future.
Matt, I've got to say, you've got your finger on the pulse, because reading through, again, the wish list that you had put together last week, it's pretty much hit all these areas on the head. What little bits of secret insight do you have that the rest of us don't have?
It's just about knowing what the government are thinking, but also having a look back. I mean, I've had a look at many federal budgets over the years, and when it comes to housing, there's not too much that the federal government can do, to speed up the housing. It's because a lot of it does fall within the states, but there is a lot of levers that they can pull, particularly when it comes to funding infrastructure and some of those kind of high-level tax incentives.
Supply and demand has been the talk of the town for a little while now, and that clearly has fed into why we are suddenly getting all these packages that do seem to focus a lot more on the supply issue. That's been something that's been on the radar and a request of various groups within the housing sector for a long time now. Do you feel like we're finally getting some traction on these?
Yeah, I think the recent rental crisis, if you would like to put it that way, or the very low vacancy rates and the increase in sort of homelessness and the need for social and affordable housing has really come to the fore over the last, couple of years since COVID. And so I think it's really important for every level of government to ensure that they are funding for the most vulnerable in our communities, but also ensuring that there is supply coming into the market for all household types, no matter where they are in the country or, what social or demographic background they're from.
And there's probably some investors out there that are going, oh, this doesn't really affect me. But that's not the case, because we do very much have an unhealthy property market at the moment.
Well, that's right. I mean, I think this is a very welcome package that the federal government has announced, but it won't really go to alleviating that kind of supply issue in the short term. A lot of these measures here are very welcome, but in order to build and get housing into the market, the federal government needs to really work with state and local governments in order to speed up, the roadblocks that are affecting the construction cycle. So things like planning, taxes, the cost of finding labour, paying labour and construction materials, those kind of things is what really needs to be looked at. So when you're saying that it doesn't affect those listening on the podcast, well, it does, because short term, it probably won't have an impact on the market, but medium to long term, investors particularly will need to have a look at where the new construction is being built, where the infrastructure is going in, where the housing's going in, and obviously it may be in an area where they currently have an investment, or in an area where they're looking to invest into the future.
Food for thought there. Don't go away. Plenty more from Matthew Tiller after the break. See you soon.
Are you looking to invest for a big return, but are unsure which suburb is up and coming and guaranteed to give you the most bang for your buck? Smart Property Investment and Pure Property Investment have unveiled the Fast 50 report for 2025, identifying the suburbs backed by research that are giving investors the highest returns. Don't make any investing decisions until you read the free report. Visit smartpropertyinvestment.com.au to download the report.
Hey everyone, welcome back to this episode of the Smart Property Investment Show, the pre-budget special, really. We are here talking with Matthew Tiller, the head of research at LJ Hooker Group. And over the weekend, there was some big announcements with respect to housing. But Matthew, there's probably a lot still to come in this budget that may not directly seem like it does affect housing and property, but investors really, really need to have a handle on what is said within this budget.
Yeah, well, the federal government's annual budget is an important document for everyone to be across, because it contains the policies, funding, data, which impacts housing markets and the broader economy, and provides a roadmap really for where the government's heading over the next 4 years. And before delving into, the details of what policies are contained within the budget, it's really good to start with what the economic and demographic forecasts are that the government, has in the budget. Because these numbers give us a sense of how the government sees the next 4 years panning out. It shows us what they think, or what Treasury thinks, in terms of GDP, inflation, unemployment, wages, and all of those things are really important indicators for investors, owner-occupiers, everyone that participates, within the housing market.
Well, we're still going to have to wait until Tuesday night to see how optimistic or pessimistic the government is about the economic landscape. Matt, you do have access to a lot of data. You've been looking at the economy for Australia over a long period of time. What is your judgment of where we are at right now? Because depending on who you turn to, you get a completely different answer. And so, I guess caveating whatever you do say now as well is just one perspective, but it's a valid perspective. And you've been doing a lot in this area to back up whatever your response is about to be.
Well, it's an interesting time at the moment for the economy because we're in this. I mean, I think the biggest pressure on the economy really is and has been inflation. Obviously, cost of living pressure is really now putting pressure on households. We've seen that recently in the most recent retail figures, which has seen really household spending drop off. And that really comes from the pressure that inflation has had and the high interest rates that are now really starting to impact, the household sector in Australia. So that is seeing a slight softness in the overall economy. In saying that, though, there still are some bright spots in the economy. I mean, unemployment still remains very low by historical standards. I mean, it's still under 4%, so it's in good shape, I would say, the unemployment rate there, and wages have been ticking up as well. So the combination of those two things combined with very strong population growth over the past year has really sort of held up the economy, and in addition has flowed through to really driving property markets, whether that's rental markets or, the sale markets for property in both capital city and regional markets across Australia.
Where do you think the property markets will go from here? Given what's going on, we've obviously got the federal budget and that's going to impact thinking, but beyond that, we've just had the Reserve Bank of Australia keep the cash rate at 4.35%, holding it for a fair while now. There's been talk about raises. There's been talk about cuts. A more conservative approach would say that it would just stay down the middle somewhere. But where to from here on that front as well?
Yeah, well, as hard as it is to always make predictions, my opinion is that the RBA will hold rates steady for the remainder of this year. I think there's enough softness in the economy for them to not raise interest rates, but there's still some pressures there from an inflation perspective to make them not cut interest rates. So I think it will take that they'll generally take that middle approach, take the narrow path as they have been treading for a number of years now, and just hold steady. And with the next movement being a cut early on next year. What does that mean for property markets? Well, I think it really means property markets will generally trend about where they are at the moment. And at the moment, we're seeing a fair bit of activity in the market. And really, I've just got to go back to Economics 101, and really it is driven by supply-demand imbalance. So like I've said, population growth has been extremely strong and supply has been pretty much extremely weak. So that is why we have seen 15 continuous months of price growth. That's why we've seen very strong rental growth. And that's why activity from a buyer perspective has been quite elevated.
Keeping it on Economics 101, Matt, for those that maybe don't know the ins and outs or the intricacies of how all these, the RBA and the federal government work together, or what the impact is going to be on increasing the supply. We've obviously got the target of 1.2 million homes over the next 5 years, which is pretty much 4 years now. It's creeping up a little bit closer. But what will be the impact when we introduce this supply into the market if what is holding it up now is some of this scarcity of supply?
Yeah, well, I think one of the positive things that the federal government announced last week was not so much the housing package, but earlier in the week, they announced a package in relation to construction workforce. And I think this is where a lot of pressure has been in terms of getting new supply into the market, has been the constraints on the supply of labour to residential construction industry. So we've had a lot of infrastructure work. There's a lot of commercial work going on, but a lot of residential construction has sort of been losing out a little bit due to, the fall in profitability due to rising construction costs, rising wages from tradies as well. So last week, the government introduced, a range of packages trying to incentivise more apprenticeships, construction apprenticeships, more TAFE courses, and also, which I think will be the one which will drive the fastest take up or turnaround in the skills gap, is streamlining the assessment process for skilled migrants into Australia, into the construction industry. So we already have those people in the country, yet they can't work because the skills that they have from another country are not yet recognised. So I think that package will assist in the short term to get more people into the construction industry and get those houses built that we need.
Awesome. We're going to take another break there. See you very soon with more from Matthew Tiller.
Ready to supercharge your mornings while supporting work which improves the lives of Aussie heroes? This June, Invictus Australia is challenging everyone to rise at 6 a.m. and get active for 6 days by taking part in their 0600 challenge. Conquer your morning however you choose, a run, swim, or a group fitness class. Whatever gets you active and connected. Empower others to support your challenge and fundraise to help strengthen the lives of our Aussie heroes through sport and help Invictus Australia combat the statistic that we lose 6 veterans to suicide a month. So what are you waiting for? Visit www.0600.com.au to sign up today and join the 0600 community.
Welcome back to this episode of the Smart Property Investment Show. I am joined by the Head of Research at LJ Hooker Group, Matthew Tiller. Matt, just before the break, we were talking about how construction and apprenticeships should boost that sector moving forward, and that is going to be a really, really welcome relief for a lot of the rising costs that has prevented a lot of the supply from being able to be built over the last couple of years. And obviously that pipeline is very, very important for the future. Going back to that question around what is going to be the impact of bringing so much more supply into the housing market, do you think, if what is holding up and what is propping up the property market at this point in time is around that scarcity of supply? Because we do have a supply crisis and affordability and a rental crisis. And what happens when that is no longer there? We're going to see the bottom fall out of property.
Grace, I think it's a long time before we even get close to supplying new homes at a rate that they need to be at. If we have a look at, the federal government's 1.2 million housing goal over 5 years, it basically, it's close to 250,000, just under, homes that need to be built every year to reach that target. If we go back and have a look at what happened last year in 2023, 172,000 homes were completed during 2023. In 2022, that's just a slight drop on what was on 2022, but it's about 10% below average and well short of that, 250,000 new homes that is required. So while this may help in the short term, there's by no means the capacity at the moment for the residential construction industry to ramp up to a rate that's going to be above 250,000 homes a year to speed up or even to hit that target.
All right, Matt. There have been so many announcements, as you said, over the last couple of weeks. The government has done a really good job of pushing out the good news stories. And it is great that they are focusing on the issues that they need to be focusing on. Is there anything else, though, from your perspective and the research that you have been doing and are currently doing that still needs the attention of the federal government at this point in time, where meaningful difference can be made to the current property market?
Well, one of the things is around ensuring that, so when we talk about supply as well, it's important to also focus on the existing stock that we have across the country as well. So the turnover of the existing stock has been sort of very low over the last few years. So it's important for the federal government to ensure that people can downsize as well. People are encouraged to right size. So that's whether that is, say, a young couple moving from an apartment to a house, or older retirees moving from a large house down to an apartment or a townhouse. Ensuring that the housing stock that we have is productive for the population that we have. So I think the incentivising, particularly for downsizers, that it was announced in last year's budget, things like extending the exemptions of house sale proceeds from the pension asset test. They can also broaden the eligibility criteria for downsizer contributions to superannuation. So there's a few things there that the federal government can tinker with to ensure that people can downsize or right size from into retirement. That's one thing. The other thing on that point as well, I suppose the biggest inhibitor of people moving, whether that is downsizing, upsizing, or moving from one location to the other, is obviously stamp duty. Now, stamp duty is obviously in the state government remit, but federal government can always incentivise or help wean state governments off stamp duty. And I think that is another thing that the federal government needs to look at, is a way that we can reduce the burdensome taxes that are placed on homes and housing markets that really stop people from transacting, moving house when required and when needed.
How optimistic are you that they will take action on this?
Not in the short term, not very optimistic at all. I mean, the general tax reform is something that consecutive governments have always kicked down the road. So I don't think that is something that's been looked at by this federal government. But, I think things like these small changes to super contributions and things like that by retirees downsizing, those small things can help and do make a difference.
Ben, I do have to ask you, a bit of a out of field question, Matt, for you, is just around the fact that we are in an election year. The end of the year is likely to be when we do see another federal election come up. We obviously are a long way off knowing the date of that, but housing is clearly going to be an election issue for this cycle as well. And what do you think will be some of the points that are argued or put forward by, the government, the opposition, as they vie for the attention of people this election term?
Yeah, I don't think there's going to be too many major changes to housing tax reform or any significant changes in that respect. I think, what the government has laid out so far in terms of increasing housing supply goes in the right direction. Obviously, supply is the biggest issue at the moment, whether you're a tenant looking for rental accommodation, a first home buyer looking to get into the market, or someone looking to upsize or downsize. Having suitable housing available for you to move into or to choose from, that's the biggest issue at the moment. And that's what's driving low rental vacancy rates and deteriorating affordability. So I think that's going to be the focus of governments. We've seen, obviously, in the past, governments try to put policies out on changing negative gearing and capital gains taxes, and it obviously hasn't gone over well with voters, and nor would it be a good policy either, particularly in this environment where we do need investors, private investors that make up the bulk of the private rental supply, that the government needs to ensure that private investors are supplying that private rental market with rental accommodation.
Well, all we can do now is wait and see what does come out of that federal budget tomorrow night. Investors, you should be paying attention, because it will give you a lot of information, insight into the government's thinking moving forward, and some of those settings that are going on and why they're going on. I think that's probably the more important part there. Matt, thank you so much for your time today. As always, wonderful to chat. I'm sure you'll be just as glued to the budget tomorrow night as we will be here.
Thanks for having me, Grace. It's always the most exciting time of the year, I think. It's Christmas for economists. So look forward to seeing what comes out on Tuesday night.
And I can't wait to have a follow-up chat with you, I think, at some point to unpack what we do hear and see from that budget. To everyone who is listening along, we hope you have enjoyed this episode. Like or review us on whatever platform that you do listen to your podcasts on. And if you have any questions, editor@smartpropertyinvestment.com.au. As always, stay up to date with all the latest on our website. Subscribe to our bulletins if you have not already. And check us out on social media, Facebook, LinkedIn, Instagram, and X. Until next time, stay safe and well wherever you are listening from. Bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Feeling trapped by rising interest payments? Escape from mortgage prison with expert refinancing assistance from Finny. We have helped hundreds of borrowers break free from higher loan repayments by finding a more suitable loan. Our expert team can quickly assess your situation, and if there's a better lender available, we'll find it fast. Don't delay. Call today. Speak to a Finny mortgage specialist on 02 8866 2444 or visit our website at www.finny.com.au.